Guaranteed investment note. I think across the market out there, other asset classes, there might not be a lot of product that use the word guaranteed, but this product has been approved by Securities Commission, our regulator, to offer this product to our investors. So from here, both the principal and the returns are guaranteed. And the return are somewhere between 6% to 8% gross before service fee. But what is special about guaranteed investment note here is there is a guaranteeing entity in the middle. So in the event of non-payment from SMEs, then the guarantee entity will step in to make payment to investors. In return, they will take over the claims of that from the investors. The type of product that we guarantee are actually usually microfinancing. Microfinancing are targeted for micro SMEs out there. For example, your e-commerce seller, for example, your hawker store seller, those are very, very micro and the business model is very small. So unfortunately, these are also the group of people that are underserved by the bank. So that is why we step in and then we will fund their financing, their business requirement. On a per note basis, actually, they are very risky because, small business and all that. So the default are fairly high. So we cannot put this on our platform for investors. So what we do is we have a guarantor to come in, wrap the product with the guarantee, and then we put it on the platform to invest for investors to invest. But it also allows us to serve this group of SMEs. If you are investors who are looking for a stable and consistent return, and also looking for an opportunity to compound the returns, right? Then the term financing guarantee investment note is suitable for you. So like I mentioned earlier, guaranteed investment note, there is no late interest. So if you are looking forward to that, then this is a no for you as well. Now, the third thing is, if you're looking for investment products that requires liquidity, meaning you invest 3 months later, 4 months later, you want to withdraw the funds, then guaranteed investment notes, the term financing one is not suitable. For bullet financing, we have very limited availability. Every day, I think we put up less than 10 notes per day, and the amount are usually quite small, less than 100K. Why have this feature? Why auto invest? Why diversify your portfolio? Because SME financing or debt investment, they will have a certain level of risk, but the key is to have a diversified portfolio. So that is why we introduced auto invest board very early on. Ever since I think we launched, we already have this feature, and also why we introduced this maximum issue exposure feature as well. So we do review our investors' performance every now and then on aggregate return, they get about mid to high single digit kind of return, net of fees and also default. So we also noticed that those that actually lost money or experience a lot of default is because of concentration risk. They overexpose into a single SME. So having said that, when you say diversifying, when you invest you might invest 100 ringgit in all the notes, right? But your 100 ringgit in all the notes, you might have invested multiple times into a single issuer. So that is why it's very important to limit your exposure to a single SME as well.